Mark, let me bring it to a slightly different angle now. The banks will reopen tomorrow, we understand, for pensioners. There is the very humanitarian side to this crisis as it continues.
€60 is not a lot of euros. And the longer... Don't forget, Cyprus, capital controls lasted, what, 2 years? 2 years. They were supposed to be a temporary measure. Very hard to...
They were in a programme as well, Mark, weren't
they? Very hard to unwind.
And it was more than €60 a day, actually. It was at €300.
And the pensioners, they're losing, what, a third of their pensions already in terms of what they're allowed to withdraw. You know, this has a GDP impact as well. If you haven't got money to spend, then the contraction we've seen in the Greek economy can only get worse from here on.
Yeah, and also the summer months are crucial for tourism, which is exactly what you don't want to happen, like losing those tax revenues. Some Greek newspapers, Cathy Merini today, is saying that in 10 days supermarkets will run out of food. So clearly what Tsipras hasn't told the population is that a no vote also means pain, hunger, you know, not being able to buy medicines, and the population will soon discover that. So it's dignity, but you can't fight a war with an army on an empty stomach.
But so either way, he won't survive. We're going to have a new government in place. If it becomes Armageddon for the Greeks on the streets, they're not going to keep him in power.
With a yes vote, we are going to have a new government. Tsipras already said it's not going to carry on, so that's likely to be a new government. With a no vote, I think initially Syriza could stay in power, but then the situation would become more and more difficult for the population. So eventually, it's very likely that the government will fall, even with a no vote, and you may have a unity government, which is the only way back to a table for negotiations, or you may have something else, which, and it may be too late.
Can we talk about contagion? We haven't seen any need thus far for the European Central Bank to act, as it were, in terms of the bond markets. Simple question, are you surprised that the euro is held up and that bond spreads have not widened? Alberto, first of all.
I mean, this week, the market was expecting an IMF mispayment with a very high chance, and I don't think the market is pricing a Lehman event at all. You know, and it's not a Lehman event, it's more like Cyprus. However, we are in uncharted territory if we have a no vote, and if you get closer to an insolvency situation for the Greek banks and potentially issuance of IOUs, a parallel currency. It's not a Lehman event. There is very little direct exposure to Greece, but the cost of an exit is high. I mean, if there is a no vote, if there is an exit, there will be more contagion, not what we have seen this week.
It's the unknown unknowns that get you. It's not the known knowns, it's not the known unknowns, it's the unknown unknowns every time. And if you think about what happened after Lehman, it was the surprises, it was the instant drying up of liquidity, it was the death of wholesale markets.
But Mark, how can we know what's going... I mean, if at the moment, I think everyone is saying, well, we could see a breakup of the Eurozone, but no one really believes it, because we don't know what happens if they leave the Eurozone.
No, we don't, and that's why this is such a ridiculously horrible situation. How did we get here? Seriously, how did we get to a point where a member of the Eurozone hasn't got any money left? People might end up starving. They might have no medicine. This is not what the creators of the project expected.
Paul Krugman would maintain that this was a containable crisis and that they've let literally the dogs off the leash, in that the politicians really have played it completely incorrectly.
I don't think anyone comes out of this well, I think. Apart from the ECB, who've been steadfast, I think everyone else shares the blame.
I mean, let's try to get to a yes vote and back on the negotiations. I mean, it's still so far 60% in the polls, but you know, we're not at an exit situation yet.
If we were to be at an exit,
but if we were to be, the consequences would be disastrous for Greece. Right. There's been a lot of second chances, you know, a lot of last-minute agreements. Juncker said they tried again this week. This is, however, a political situation. It's not the country, it's the government. The government can change.
Alberto, thank you so much. Alberto Gallo, head of macro credit research at RBS and Bloomberg View columnist. Mark Gilbert.